Good morning, everybody. This is John Seville from Acorn Wealth Corp. This is your stock setups for Friday, last day of the week, and let's have a look at the S&P 500. We are currently we have broken open range to the upside, so that is indicating an upward bias until the 17th of June, which means that basically what that open range suggests is that we should close. By the 17th of June, we should close no lower than 2085.1 if the market respects that open range. So that's quite a tight level of consolidation between 25.1 and resistance at here at the high of 2011. Excuse me, 2111. So basically, we have a 11-point range. So we'll see, because basically this could be a potential breakthrough. It could be a double top, and open range could fail. Only time will tell. But right now the bias is definitely still to the upside. So I will be reducing my positions in my shorts and looking to relocate some of that capital towards some of the longs. Now the longs are doing really, really, really well right now. I mean, as you all know, if we look at some of the ones. I'll start with the new longs. Let's have a look at the new longs, just because it's the market does open here in 45 minutes. So let's start with the new ones, then we'll have a look at some of the other ones. But yes, the market conditions are still bullish. But what does make me a little bit dubious is the fact that the high yield bonds are breaking down. We had the gap down yesterday. We rallied. Gap down 2 days ago on heavy volume. Then we rallied up yesterday, but we didn't break through the moving averages. And the volume was weaker. Went from 16 million to 12 million. Hit the moving averages and just kind of rolled over. And then if you look at Dow Jones Transports, we didn't break through either there. So I mean, there's certainly divergences all over the market. So I wouldn't be as bold to say that, hey, this market's going into another big up leg. But I'm not going to go against open range until it's broken. Now, if in 2 days' time open range is broken to the downside and we see bear signals start to kick in, then that's the beauty of being a technical trader. I can take all the positions I'm in and just get out. Bang. Click of one button. Close all positions. Bang. And that is why right now my preference is to stock trades with big potential profits. So all the stock trades I'm looking at are basically 10 to 20% potential returns, sometimes in some of them more. And if you want to get more leverage than that, and then instead of going for an option, my personal choice is going to be to leverage the stock. So I mean, that gives me much more control over where I can get in and out because of the liquidity of the stock versus the option. And so I can take, if I want to get leverage, if I want to turn 10% into 30%, then I'll just use 3 times leverage of the capital I put into the stock. Now that, of course, is completely up to you, and I'm not advising that, but I'm just saying that right now a lot of the options there's such heavy levels of volatility that I would prefer to be in the stock right now when we're in this level of uncertainty. So there's the kind of the divergences that I'm seeing. So it is questionable. So let's have a look at that's why I'm focusing purely on the fallen angel strategy at the moment. The first stock I like is CRK. I'll just bring this up for you. So here's my notes. So CRK I'm looking at as a long. Again, we've got this nice kind of this is a very long-term downtrend. So I mean, this could be a if you like the company fundamentally, this could be a fundamental long-term hold. As a short-term trade, however, you can see it's got a lot of moving averages above. I would certainly keep this on a watch list, that if for some reason this market does recover, I mean, this stock has got from $30 all the way down to 74 cents. That's a huge potential recovery if it's able to gain back its ground. Lots of moving averages here. This is the kind of thing I would look at for a longer-term recovery if we see these moving averages all cross and the stock gets on top of it. Obviously, that's a different type of trade. For a short-term trade, I'm looking at the entry criteria of 76 cents. I'm looking at the exit criteria, first target of 88 cents, which is basically a rally into this moving average and these highs. The highs here being 90 cents 90 cents, 90 cents, both the highs. So looking at 88 cents as a target. My secondary target would be a breakthrough of that, and then I believe we'd run all the way up to where this oscillation resistance is here. So I'd be looking at a secondary target of $1.17. So on the secondary target, that gives us obviously a 40-cent potential return, which is over 50%. The stop criteria is 69 cents. And that is again a very speculative stock, but it's trading 1.5 million shares yesterday. On Wednesday, 1.1 million shares yesterday. So tons of volume in it, or value in it, I should say, because that's you're dealing with $1 million a day. So I mean, it's a very small stock, but it's not a pump and dump penny dreadful. You know what I mean? So. The next one, VCYT, they're not all cheapy stocks. There's kind of a range here. VCYT, it's not so much a fallen angel, but a potential building, more of a stochastic trade, which is basically looking at something that's oscillating, that's potentially turning back into a a momentum trade. So looking at the kind of the system of resistance here. Looking at the system of resistance here. We've got, kind of potentially some of that falling wedge type of scenario. It's not that strong though, because I mean, really, I advise usually against jumping through information like this. We want to kind of be more left to right, so we'd be more likely to look at this kind of resistance line, to follow our rules. And so we've kind of got more of a downward channel. There we go. More of a downward channel with a kind of a little bit of a breach here. So we want to make sure it breaks out first, because I mean we can see that that's resistance. We want to make sure, or possibly a head and shoulders. So we want to make sure that it's broken out beyond that. What I liked about this, what really kind of made it jump out at me, is the fact that it's closing really high, really pushing into this resistance with strong money flow, which says yes, there's resistance here, but it's got a good shot of overcoming it. So I wanted to see it break resistance first, which is why I've said, okay, I want it to go past 553 from where it's at 548. So we wanted to go through 553 as an entry criteria. Then I look at the target one as 593. There is no second target. I would reevaluate at that point, but there's all these moving averages right here. So, but given the short-termism of the market outlook, I would look at that 593 target. So basically just a 40-cent pop, and I look at the stop criteria at 527. Special comments: there's insider buying from the CEO, and there's also quite a fair bit of institutional buying coming in. I think it was around February. So that's something that I would take a look at. IMMR is the next one. Now this is a very typical bump and run formation. We've got the handle coming down here on the left, back and forth, back and forth, back and forth. Kind of looks like a frying pan. There's the handle, there's the frying pan. I like this pattern a lot. You can see the money flow starting to come back up here. It basically matches the stock. There's nothing special we get from the money flow, because it basically looks exactly like the stock does. So there's no real divergence there. So there's no special ingredient, but it is a powerful pattern. I'd be looking at a potential long from 650. Again, basically where the price is currently at, and I'd be looking at a target of 738. Now, if it starts to look weak or the market starts to turn, then that might be a premature exit around 7. Because that's going to be where this moving average is here and where that resistance is here. But that's going to be something we'll have to look at as the market continues on. But I certainly look at a stop loss of 627. And the idea with all of these is to make sure we have good risk-reward ratios, so that the idea is not to, we'd love to see all of them succeed, but as you've been able to see with our recent alerts, quite a lot of them have actually. I mean, but really we want to plan around uncertain markets. So with uncertain markets, let's say that we have one sector that goes bad, or a bad day and a pullback. I mean, we got to plan. We want to plan around having tight-ish stop losses. So we might get stopped out of some. Some might fail. Others will succeed. So we need to make sure risk-reward ratios are there. So that worst-case scenario, let's say that only 50% of the trades went well. We still want to be able to make money at that percentage, right? I mean, even at 40% ratios, we can still make money with right risk-reward ratios. So obviously, we're not expecting that. I mean, I would expect that with a fallen angel type of trade, that we'll see somewhere between 70 to 80% success rate. But nevertheless, plan for the worst and be happy with everything extra. So that's kind of been my approach is to be a very dubious trader right now. So that's why I'm being. So as soon as we start to see rallies in these, we'll protect the entry criteria with raising the stop loss, and that will allow us, to basically have comfort to know that everything. The worst case scenario then is we get out with what we got in at, and again the rest is cream on the top. CARA is the next one. We've had some insider buying here. We've got nice money flow divergence coming up from the stock. Not divergence, sorry, accumulation coming up from the stock. There doesn't seem to be much stopping this, other than the horizontal resistance here. The high of 668 is going to be a problem for this stock, I'm anticipating. But it wasn't a massive reversal. It was from 668 down to 631. So it's still 5%, but again, not a huge reversal like this, right? So basically, with this one, I'd be looking at an entry criteria of 640 and above. And I'd be looking at a target of 793. Of course, we'll adjust that down if we feel it's necessary based on the market. If market starts to struggle, but again, really the strategy here is just to let it rally up and move the stop loss up behind it. Insider buying on this stock as well, and a stop criteria of 597. Last but not least, we've got IMGMN. Now this one has a really nice chart, really nice support. It's broken all the moving averages, and it's got very decent volume. If you want to trade the options on these, you certainly can. I mean, I'd be basically if you are looking for options on any of these stocks, I would be basically what do we have, June. I'd be looking at September option. I'd be looking for one liquid option, something that has a small spread, so that with lots of volume, so you can get in and out easily. And then in terms of expiration, I'd be looking at a 3-month minimum month, and I'd be looking for in the money. So basically, either in the money or just slightly out of the money. So like for example here, if there were 650 calls, that's what I would be going for, or $6 calls that would expire in say September. So with this one, OCO order above 623, or a pullback to 603. That's so an OCO order means one cancels other. So I'd either be looking for an entry as it goes up through 623, or pulls back to 603. 603 is support, so we're looking for a pullback to support or a break of a new high, which of course is the definition of an uptrend: higher highs, higher lows. So either a pullback or a breakthrough. Obviously, we don't want to do both, so that's why it's an OCO order. I'd be looking at the first target of 696, second target of 868, which is where we kind of pull up to where this moving average comes down. We'll have to see where that moving average is when it gets up there. You may find that it ends up being closer to say 822, which would be a gap fill. And again, the stop criteria 553. Insider buying on this one as well. I've got a couple of other little favorites. I wrote down FRGI and FOSL that I've been watching also. But look, I mean, as you all know, I sent out my list. That there's so many potential trades on this one. I know Kyle was really favorable of CLVS as well, Clovis Oncology. I mean, but there's just so many potential trades. That's why, really, you want to master the strategies. And master the scans and master the analysis yourself, so you can look at these opportunities and decide which you like the best. Because I can't publish 50 new trades a day. Yeah, look, and of course we are doing the draw today. For everyone who attended our workshop last night, we are doing that special draw today. So make sure you, for the Acorn Scholarship, so make sure you join me at 9 Pacific, 12 Eastern, to see who the winner is, and we will be seeing you all shortly. Have a wonderful trading day, and see you soon.